Grüezi. Good afternoon and welcome to the international webinar series of the LPA. Today we are co-hosting it with SECA, our friends from Switzerland, and also our friends from Luxembourg. Today's program will be composed of first a fireside chat between Tobias from Partners Group and Raja, who is a PE investor, LPA board member, former chairwoman, and also CEO of the association. Great to have you here again. And afterwards, we'll pursue with a panel discussion on Luxembourg distribution operating platform for PE fund managers. That panel will be moderated by Carmen from EY. And afterwards, then with the panelists of Michael from Blue Orchid, Daniel from Patrimonium Asset Management, and Christian from B2V Partners. All the questions can be asked during either the fireside chat or the panel via the Q&A function or the chat button. The Luxembourgish and Swiss cooperation lasts for decades. It started all with the UCITS fund structures in Luxembourg, also due to the EU passport, the certainly agile Luxembourgish toolbox, the experience of the best-in-class service providers and experts in Luxembourg, certainly also the handling of the languages, and sometimes the logistics, despite some quite expensive flights between Zurich and Luxembourg, for example, but COVID might change that in the future. In any case, lots of good experiences. I remember too, when I was working in the industry, a strong cooperation between Luxembourg and Switzerland, aligned interest marked these past years. And all our speakers of today will share their insights and also give you an update on that position. So now I will pass over to Maurice, the Secretary General of SECA, who will also share a few words with you.
Yeah, good afternoon and welcome everyone. Thank you for joining us for today's webinar. It will be hosted by SECA, the Swiss Private Equity and Corporate Finance Association, and key speakers and panelists are from Switzerland and also from LPEA, the corresponding association from Luxembourg. We are both members of Invest Europe. We have both the same targets. We are part of this European private equity body. I'm Maurice and General Secretary of SECA, but I'm also an investor in a variety of PE and venture funds based in Luxembourg. So my question is always, why are there so many funds in Luxembourg? Is it the only good option for a Swiss private equity manager or VC manager, fund manager? As many Swiss fund managers, we have had close ties to Luxembourg for many years. Luxembourg is certainly a key hub for PE and VC investors. And I can give you just an advice. You really need to pay attention to our panelists. I usually meet some of them in Berlin at the end of February at the Super Return. But as many other things, this conference has been changed to a virtual basis, and that's always a bit more difficult than to communicate. But on the other hand, like today, it's certainly easier to attend a webinar. So my suggestion is that you listen to my friends from Luxembourg, that you listen to the details of Tobias, Michael, Daniel, Christian, and please use that chat function. Right now, I believe everyone is on mute to avoid background noises, but your active participation through the chat function is very welcome. And with that, I would like to hand over to my friends from Luxembourg to introduce themselves and the panelists.
Okay, so thanks a lot, Maurice, for your kind words, and I will pass over now to Raja.
Yes, thank you, Stefan and Maurice. Always feels good to be back, and I always enjoyed the interaction between the Luxembourg and Swiss community of private equity. So I think with Tobias Gisa from Partners Group, we are here to tease you and warm up the ground for the panel that will follow. We are here to talk to you about the story of Partners Group, which is a bit of the poster child of what Swiss private equity fund managers can do with Luxembourg. and thanks to Luxembourg. And to introduce my fireside chat companion, Tobias, I think you've been with the Partners Group since 2010. Currently, you head the structuring group with a team of 40 professionals, and you are therefore the global co-head and managing director for this unit. But when you joined the firm 11 years ago, you were, I think, coming from a private law practice, and you were the head of the corporate legal team. So quite a nice background. And from what I understand, when we were preparing this fireside chat, you are increasingly busy tailoring special situation solutions for your clients, because bespoke mandate is very much the name of the day. Of course, given our Swiss community, we're not here to describe what is Partners Group. Everybody is aware of this amazing success story. You were even on the cover of last year's magazine of the LPA when the association celebrated its 10th anniversary, because we really like how your story has grown over time in Luxembourg and internationally, also as a listed private equity firm. And for the kind of 10-15 minutes we have together, and the fact that we also open the floor to a bit of a Q&A, I have actually 4 questions for you. And the first one being, tell us a bit more about your background, and how also, because a lot of our viewers are people looking for jobs in PE between Luxembourg and other countries. Tell us how you ended up where you are. Very, very nice trajectory of your career.
Sure. Thanks a lot for the nice intro. Good afternoon from my end. So how did Partners Group end up, and maybe a bit more specifically, how comes that we grew the office down there to now close to 30 employees? The story is actually that around 2017-18, when we discussed alternative AFM locations due to the Brexit situation, and given the fact that back then we still had our AFM in the UK, we actually considered various jurisdictions. I mean, certainly Luxembourg, but then we also looked a little bit more deeper into Ireland and Liechtenstein as potential jurisdictions for setting up the new AFM. At the end, I think it's fair to say that it was not only our already existing Luxembourg office that we already had, but certainly also a few tax considerations, mainly against the background of our investment structures from an SPV's substance and principal purpose perspective. At the end, it came down, so the shortlist really was then Liechtenstein and Luxembourg. Liechtenstein was considered attractive as well. However, then, and that in addition spoke for Luxembourg, Liechtenstein was, at least from our perspective, neither tested nor broadly accepted, especially in the market as an SPV location. So I think it's fair to say that it's also due to Luxembourg's reputation already back then, that actually then, was the decisive factor for us to move our AFM from the UK to Luxembourg.
Can you comment a bit more? What do you mean Luxembourg reputation? Because it means a lot of things to different people.
Yes, certainly, and maybe then we can actually combine that then with some of the challenges as well. I mean, the reputation, I think it's just an already or it was an already very developed market and investor-friendly ecosystem. I mean, one has to understand that it's not only due to the various structures they offer there, but you basically get all the services, the proximity also to all the service providers you have on the ground. And also what we consider so far actually also a good dialogue with the regulator, and also proximity to regulations, to new developments. That's actually what we meant by it's an accepted and well developed market down there. And at the end of the day, this is then why we decided to stay there, and then of course then over time to even grow our business and our activities in Luxembourg.
Okay, and today, so you have full operations in the Grand Duchy, and tell us about your Luxembourg office, because the head of your Luxembourg office is quite an established lady, Vanessa Camilleri, who we appreciate very much, also as an aspiring private equity professional. Can you tell us a few words about your local presence and how you work together with the Swiss-based operations?
Yes, sure, absolutely. So again, we do have close to 30 employees down there in Luxembourg. A couple of years ago, we even moved into a new office space, and I think it's fair to say that you know, due to our setup and the majority of funds at this day that we send up are Luxembourg structures, especially due to this whole RIFE regime, and there are daily interactions. I think at various levels, right? For example, whenever we launch a new fund, we do have on the ground a so-called fund acceptance committee, where we do have all these conducting officers, and that especially from a structuring, so sort of, you know, where the money flows in side of things. We do have a very regular interaction with our colleagues on the ground, and then also on top of that with a lot of service providers, again due to the various structures we maintain. So it's not only about setting up new things, but certainly also whenever it comes to some of the restructurings, or what you kindly mentioned at the beginning, Raja, about the more and more bespoke solutions we want to offer. That certainly also then warrants a very active and ongoing dialogue, not only with the Luxembourg office, right, but then also with the service providers on the ground.
So it's a fully extended operation now with 3-4 years of track record, if I may say. If we expand a bit the debate beyond you as a privileged observer of the local ecosystem, where do you see the biggest challenge for Luxembourg going forward, Tobias? And especially for a firm of your size, you're a multi-asset platform with that keeps adding strategies to its portfolio of funds.
I'm happy to share that. Of course, next, what we heard at the beginning, next to the expensive flights from Zurich, of course. No, so I think, you know, it's well known, and also when just, you know, 2 weeks ago I had a discussion with a colleague from a competitor in the US, and they are currently also looking into moving part of their business to Luxembourg. And I think, you know, if we look at the numbers with around 4.5 billion net assets under management in regulated funds, I mean, it's again just, you know, to re-emphasize, needless to say, that Luxembourg is one of the most important fund centers. I mean, not only in Europe but also across the globe. We would say that due to its stability, again, the good reputation and the very friendly ecosystem, one of the key challenges certainly is how to cope with the growing business activities and the demand, especially when we look at the service providers. So it's less about, I would say, the availability of the services, because again, right, you get, I mean, everything what you need in order to successfully run a business down there. But we do from time to time see some challenges as it relates to the quality. We see that many service providers struggle with both the demand, but then also especially with the continuity in terms of employee retention. And that, of course, in turn has an effect on both of the timely delivery of some of the services, and unfortunately from time to time also quality. But again, I mean, don't get me wrong, right? But we want to also, you know, challenge each other. So we do see this as a challenge. I'm not saying it's a fundamental issue or a problem, but also exactly. Also, given, you know, what happened now after the Brexit, and so more and more business down there, it's basically, if you so want, almost a little bit maybe, you know, the result of the huge success and this fast growth, and that is certainly something we need, or Luxembourg, you know, needs to tackle. On a related note, maybe also to add this, it's not necessarily directly related to Luxembourg, but we appreciate the general view of the CSSF. This is in respect to the AFMD review and especially the respective ESMA letter. I mean, many of you are probably familiar that ESMA wants to legislate further in the area of delegation and substance requirements. And this is something we do see critically also for some of the fund jurisdictions as Luxembourg, because we fundamentally believe that of course in our case we do have sufficient substance, but we also believe at the same time that the Luxembourg requirements are robust enough actually to avoid sort of shell entities to the extent that is a concern. So that of course for the Luxembourg market could be a challenge as well, but as I understand that the CSSF is actually not necessarily aligned there with at least some of the positions in this ESMA letter.
So when you said the challenges with the bottleneck is the service providers, is it specific service providers? Is it for specific types of funds? I mean, I know you don't know everyone in the market, but what advice would you give a Swiss manager who's thinking of setting up operations in Luxembourg?
Let's put it that way. If an asset manager was to ask me, right, I mean, there are still a lot of really good service providers down there who could recommend. So it's not that I would tell him or her, oh, you need to be careful about, fund administration or the lawyers or the tax advisors. So that's certainly not the case. So for me, it's not that I could sort of, quote unquote, finger point towards a specific type of service provider. It's more like a general observation. And for at our end, right, we by now have a pretty good setup, I would say, especially with our main providers down there. And there we typically experience, good turnarounds and good quality. It's just, as a general observation, I would say this is something that the market needs to be mindful.
Mm-hmm. And so for a piece of advice for a Swiss manager thinking of expanding in Luxembourg.
A piece of advice, I mean, I think it's really at the end, really make sure that you do your homework. So, I mean, let's not probably just go with the first pitch, with the first 10 page that gets presented, right? So really do the due diligence, do reference calls. I mean, we have a pretty good know-how about the market and know a lot, but still anytime when we onboard a new service provider or where we expand certain services with an existing one, we still do our proper due diligence, and at the end of the day, it's also a people business. So don't just run after the big brands, but really make sure that you understand the people dynamics, right? So who is your engagement partner down there? With whom do you have contact? Do you have one entry point of contact only? Is it a broad team? Ask about also the team, the stability, right? All these type of questions I think are really important when you do the due diligence. So that would be one of my key advices to someone who wants to either move to or expand its business to Luxembourg.
And I'd like to add, and I'm not paid for it, also call LPA and become a member, because this is where you meet everybody on the local market. Okay, so back to you as a firm, Tobias Partners Group. You plan to continue your expansion with your multi-strategy approach. What are your plans and how are you going to implement that from an operational standpoint, and maybe give us a couple of secrets on the firm's future, keeping in mind your listed company?
Yeah. Of course, that's the secret. Easy. I mean, stay agile and stay dynamic. No, I think in terms of product, we will continue launching sort of plain vanilla products to access private markets investment opportunities. On the other side, as you said again at the beginning, we believe, right, it's important to stay agile to accommodate investor needs and continue offering innovative solutions as we deem fit. At this point in time, Luxembourg continues to play an important role for our platform. Absolutely. We at the same time, of course, also observe some of the developments in other markets. And also here, I'm not paid to say this, but also to promote a little bit the Swiss market, although in my opinion, unfortunately, a bit too late, but we are looking forward to the Swiss Limited Qualified Investor Fund that is expected to be available in the course of 2022. And that could be, at least for some Swiss-based clients such as pension funds from time to time, certainly a good alternative. But again, we do believe Luxembourg will continue to benefit from its framework, from a well-established set of rules and principles surrounding the asset management. And by the way, something to add there, and that also speaks for the Luxembourg market during the COVID now situation, right? I think also the regulator, the CSSF, has proven to support actually the platform, the market, and was one of the first European authorities to encourage actors of the financial world to switch to remote working mode, and continues to issue regular and most of the times actually really useful communications addressing the current situation. So also in that sense, right, Luxembourg, it's proven, right, that they are sort of not sleeping or just they have had enough success. We do see a lot of positive momentum also in this respect. Coming back to us again, I mean, next to the situations, for us it is a lot about mandates, where we just can accommodate investors' needs really more specifically and provide very tailor-made solutions. And again, also at that front, right, we will see a lot of Luxembourg structures and a lot of features actually the market offers, such as from time to time looking into listings at the Luxembourg Stock Exchange, or work with, special sort of securitization vehicles to accommodate investor needs. So the future is bright.
No, thank you, Tobias. I think it shows how we work well hand in hand, and we really enjoy being in Switzerland as well, because there's a lot of synergies between the two jurisdictions. I think they really complete each other well. I think we have a few minutes for Q&A. I don't know from the LP
I actually,
side.
if you don't mind, I see one, apparently one attendee, I'm just reading the Q&A, was also sort of, saying, hearing that the authorities are actually quite sluggish and costs are very high for legal and auditing work. I think that's, of course, it's always, relative to what you compare it against. But of course, if you need to set up a plain vanilla structure, and for example, you look into Guernsey and compare it with Luxembourg, it might indeed be that you end up a little bit, cheaper in another jurisdictions. At the same time, again, I do think you, to a certain extent, pay also a little bit a premium for a well-established market there. You get a lot of flexibility with the structures, especially on the investment side of things. And next to that, right, for at least a certain client base, it's still a plus to have this onshore, right, type of feeling. That's also something in terms of branding that is not to be neglected when you look into Luxembourg versus some of the offshore jurisdictions. I do hope this addresses like this question we see popping up in the Q&A.
No, thank you, Tobias. And you started answering a question I found on the Q&A about comparing Cayman to Malta to Luxembourg. So as you said, the main advantage is to be onshore EU jurisdiction. And this is a question that comes particularly from VC managers and fund managers into VC and startups in particular, especially those who may actually invest in the US. I mean, I guess this is a question we have to ask to a specialist lawyer, not you, but I mean, from our perspective, the idea is to be onshore. Yes, it's more costly, it's more constraining, but it's much more reassuring and investor friendly. And it's in the end a protection. And I think that's why we see more and more offshore funds migrating towards Luxembourg. I think Malta can be good for certain operations. I don't know if Tobias, you have a perspective on this.
Of course, I mean, in our setup, right, very often, especially if you have US clients and also from Asia, then typically you benefit from also, for example, having Cayman, Delaware, and others, right? Because not all of them are very familiar with European structures or have, other considerations. One aspect that we see increasingly is that from time to time across the European Union, we tend to have strict KYC requirements. That's just also a feedback we still get from clients, right? I mean, of course, sometimes they are just more used to, let's say, for example, a Cayman or a Delaware or whatever it is, but from time to time, they scratch a little bit their heads, you know, what is requested across the European Union in terms of KYC. So in that sense, maybe that could be something, you know, where we could make Luxembourg and other European jurisdictions a little bit more attractive if we could ease some of the requirements. But other than that, it's what you said. Yes, that's a feedback we get a lot, that they feel more comfortable with onshore. Don't get me wrong, please, right? There is nothing against offshore, but it's just a little bit the look and feel for a client that can be decisive.
It depends on the nature of the LP base as well. Huh? I think European
Absolutely
institutions will not go nowadays to an offshore jurisdiction systematically. I think we have time for one more question. You mentioned securitization on the Luxembourg Stock Exchange, and don't call it LSE, it's Lux SE, please. What are the advantages of doing so, and for what kind of deals and structures are you envisaging such listings, especially in Luxembourg, obviously?
For us, what we often come across, it's more actually to accommodate some of the investor needs if they have allocation issues, right? So, for example, right, if one of their sort of, you know, private markets buckets is still full, they can benefit from such a listing because they can reallocate then such investments into their listing bucket, whilst at the same time still accessing private markets investment opportunities. Mm-hmm. So that's one of our probably most common use cases where some of the clients, especially from Germany, can benefit from this setup.
Thank you. Maybe time for one little last one. It's regarding the fact that you're a listed private equity firm. What has it changed in terms of managing your operations in Luxembourg, and especially in terms of managing your relationships to your service providers?
Sorry, I couldn't understand the first part. The line was a bit...
the fact that you're listed, how has it influenced your operations in Luxembourg and your relationship to your service providers?
That's well, I mean, we have, like, since 2006 we are listed company at the SIX stock exchange, so in that sense I wouldn't say that anything changed. Of course, once you're listed right in your home market, you you don't fly under the radar anymore, but you need to particularly observe the local listing rules. I wouldn't say that this had like a material relevant impact on how we operate our setup in Luxembourg, right? Maybe it's more like also for our clients, of course, some of them also feel, you know, more comfortable due to the fact that the holding company is listed, right, needs to provide all the reports and provides full transparency. But on the operations, I wouldn't say that, you know, that has a material impact.
Wonderful. I think we prepared the ground nicely for our panelists, at least I hope so, and who we leave in the capable hands of Carmen. I guess Stefan will be, there he is. So thank you so much, Tobias, and thanks to the audience for asking so many questions, and I hope we'll see you live very soon.
Thank you, my pleasure.
Dear Tobias, dear Raja, thanks a lot for this very engaged discussion, for sharing your insights and experiences. And certainly, Tobias, on the delegation model, we're certainly huge defenders of this model, and we'll certainly do that in the future for sure. Now we will move on to the panel discussion. So the Luxembourgish Distribution and Operational Hub for PE fund managers. There I wanted to thank also Maren for the preparation of the panel, who could unfortunately not join us today, and certainly Carmen, who then proactively replaced her today. So Carmen, I will pass over to you in order then to introduce your panelists and then also have a nice discussion.
Thank you very much, Stefan. Thank you, Raja. Yes, my name is Carmen, and I'm pleased to moderate the next panel discussion, and also very pleased to introduce my fellow panelists. We have with us from Blue Orchard, Michael Wehrle. Michael is the head of investment solutions at Blue Orchard. He's heading the Global Investment Committee and overseeing the portfolio management at Blue Orchard. He's also in charge of the development of product solutions. And Blue Orchard, as we all know, is a global impact investment manager that was founded in 2001 by initiative of the United Nations. And Blue Orchard has invested to date more than $8 billion across more than 90 countries. Then we have with us Daniel Heiner from Patrimonium Asset Management. Daniel is co-founder of Patrimonium, member of its executive committee, and he's also the managing director of the company's private debt department. And Patrimonium Asset Management covers the full spectrum of private market investments, from real estate, private equity, debt, and infrastructure, with nowadays more than 3.5 billion euro assets under management. And we also have with us on the panel Christian Theis. He's partner and CFO of B2V. Christian is also responsible for the management of the Luxembourg-based investment structures at B2V. And B2V is a European venture capital firm managing about 500 million euro, with 9 funds already raised so far. So very welcome to all of you, and we will discuss in our panel both the distribution of Luxembourg funds to Swiss LPs, but we will start having a closer look at your Luxembourg operations. You're active, each of you is active both in Switzerland and in Luxembourg. And as we all know, like any fund manager, alternative investment fund manager that operates a fund in the EU, is subject to the AIFMD regulation. And in exchange for compliance with the AIFMD, you get the passport to distribute your fund shares to investors across the EU. And the AIFMD actually sets out requirements to the fund managers depending on their assets under management, but also give different options amongst which you can choose. And we will discuss amongst, like, in the context of your operational setup, also like the specific setup of your AIFM, because we will see for each of you, there are different options. Like, one option is setting up your own AIFM. Second option is to take recourse to a third party authorized AIFM in Luxembourg, or option 3, acting as a registered AIFM because your assets under management are below a given threshold. And we will discuss that amongst others. And I would like to start with you, Daniel, if that's fine, because we know that you've been doing in Luxembourg, that you've been doing business in Luxembourg for a long time already. And could you please describe to the audience your Luxembourg setup? And maybe to start, I would like to differentiate between the product level and the manager level. And maybe let's start with the product level. So which fund structures are you using in Luxembourg?
Right, happy to do that. And hello to everybody. So we started to work in Luxembourg back in 2012. And what we started to do there is that we incorporated a SIF-CCAF, which we are still using today. We are setting up a SIF-CCAF by also using an external AIFM. So we don't manage our own AIFM. We outsource that to a third party. And the AIFM is delegating portfolio management back to us in Switzerland, as we are a regulated entity here by the FINMA. So with that structure, using SIF-CCAFs and opening various compartments below that umbrella, that worked quite well over the past years. What we did lately, we also started to incorporate RIFs under the new RIF regime, which also is showing some, let's say, benefits compared to the older SIF-CCAF versions.
Okay, thank you very much. And which benefits are you referring to when you compare the SIF-CCAF version, which is more the traditional structure that we've seen in Luxembourg, now with the RIF, the Reserved Alternative Investment Funds?
Very often you hear that being subject to the CSSF is a bit more cumbersome. Actually, we do not feel that it is that cumbersome or that more costly or that more complicated. So we do not feel restricted being fully regulated by the CSSF. So this is not really a disadvantage. I think here the advantage overweights if you look at your investor base. But what we are currently what is more problematic is is the current tax regime, and very often the CFC cups are looked at being tax intransparent or opaque, and this is something we are struggling with. So the RIFE is here surprisingly to me the more beneficial structure at the moment to a good group of investors, mainly fund of funds.
Okay. Yes, and indeed, I think it shows like that Luxembourg offers this big toolbox, so you can really choose which products suit your requirements and the requirements of your investors best. And maybe to complement what you said previously, like because I don't know if anyone in the audience is aware of that. So the SIF is the Specialized Investment Fund, more historical fund structure, open to all asset types in Luxembourg, and it's subject to the direct regulation of regulation or oversight by the CSSF. But you clearly said that you do not, that you have a good experience in cooperation and with the CSSF. Whereas the RIFE, that has it's the more recent vehicle that has been launched after the IFM directive has been implemented. The RIFE on the product level is not authorized, but therefore the RIFE always needs to take recourse to an external IFM, which then on the IFM level, you have the supervision by the CSSF, of course. So you mentioned also to us that you are taking recourse indeed to a third-party IFM. What has been your the decision-driving considerations for taking recourse to third-party IFM and not setting up your own IFM?
Well, I think at the very beginning, you do not have the resources and the know-how to immediately set up an own IFM. And also, probably there is a certain threshold below in terms of assets, and below that threshold, it doesn't make sense from an efficient or from a cost perspective. So what I hear very often is that people say below 500 million, you should work with an external AFM, and above you can consider starting incorporating your own AFM. So for us at the beginning, 10 years back, it was clear we did not have the own know-how, so we had to go to an external service provider, and we stick with that. Of course, today we are looking at the option of setting up an own AFM, but we haven't yet got our head around that.
Okay. You also mentioned briefly that you are delegating the portfolio management to your Swiss entity. You're regulated in Switzerland. Can you share with us how that really works? Because indeed the AFM per se comprises both risk management and portfolio management, but one of the functions can be delegated, and very often we see that the portfolio management is delegated. But maybe on a day-to-day basis, how does that work?
On a day-to-day basis, I think as well, the process has improved over the last 10 years. So today, what we do here in Switzerland is investment management, portfolio management. So we are making investment decisions, we are selecting investments, we are monitoring the investments, and end of the day, we are reporting our decisions and the situation of the portfolio back to the AFM. The AFM does, I simplify, risk management. And I would call it surveys our work, what we do. And that split in work, actually, it's quite good, because I think there is a tendency on the investor side, they do start appreciating that there is another third party, again, looking over us. So it's maybe a bit more work, it's another layer, there is cost involved, that's all correct. But in the end, we at the moment, we appreciate the situation because we can focus on our core job, which is portfolio management, and do not have to do risk management and communicate with the regulator in Luxembourg, which is not our day-to-day job.
Okay, thank you. So yeah, it's always good to focus on your core functions. Thank you, Daniel. Michael, Blue Orchard. So you have been active in Luxembourg since long. Can you give us an oversight on both your fund structures that you are using and also your AFM setup, which is different to the one of Patrimonium Asset Management?
Yes, certainly. And well, hello, everyone. We actually use a broad range of different fund structures. So we use open-ended funds as well as closed-ended funds. On the closed-ended fund side, we actually used for a long time the SIF solution. The SICAV SIF has been our preferred solution for many, many years. But then we switched over to the RIFE structure, as it really gives us, I think, this advantage when it comes to the time to market, as it's not subject to regulation. But doesn't mean that we were not happy with the SIF. It was just a new option which was made available in the market, and we felt this worked very well for us. In terms of the legal structures, or the legal forms rather, we use actually both corporate vehicles, so an SA, for example, that's the equivalent of an AG in Switzerland, as well as tax transparent limited partnerships. And here, the investment strategy, the type of investments we make are really the driver as to whether we go perhaps for a corporate structure or a tax transparent structure. And that's also important to note relative to our investors, which we have. So we, in many of our closed-ended funds, we actually combine public investors. So that's, for example, development banks across the globe, as well as private sector investors or pension funds, family office, and the likes, mostly across Europe and a bit of Asia. And both type of investors appreciate actually Luxembourg as a domicile very much. Then looking at our open-ended fund structures, they are like regular mutual funds under Part 2 of the Luxembourg law, which again gives us sufficient flexibility to make, in this particular case, private debt investments on a global basis. In terms of our AFM setup, we use our own structure, basically ever since. So we set up that management company in 2012. And for us, it was kind of, well, the obvious choice. At that time, we felt this works well for us, gives us what we need, and that's how we operate. And in terms of actually delegation, we also delegated the portfolio management to Switzerland, whilst the risk management function is performed by our AFM in Luxembourg.
So you mentioned that at the time of deciding whether to set up your own IFM or taking recourse to third party, you felt that it was the right decision for you to have your own IFM. Now we're in the year 2021. Do you still have the same feeling? So are you happy with your own IFM? Or to put it also differently, what would you see from your perspective actually the advantages and what might be challenges, if any?
It's a good question. I think I would say our decision is still, or feels like, the right one.
Okay.
So we have and we have our team there. It's 6 people, so relatively small but powerful, I would say, and agile. And that's certainly one of the key advantages which I see relative to perhaps a third party. As soon as you have third parties involved, you need to create the interfaces, and that in many cases works very well, but is an additional layer you have. And this, in our case, does fall away. And for example, when it comes to portfolio management or investment decisions, we can basically run our standard investment committee process as we would do for any of our funds. And that makes us fast and efficient, and eventually the process is quite effective.
Okay. And at your Luxembourg AFM, do you have a direct contact? I mean, I guess you have direct contact and communication with the Luxembourg regulator, or do you outsource part of that communication to other service providers in Luxembourg? How is that organized? And if you have the direct or for the part of the direct communication, at least that you have with the CSSF, what is your experience here?
It's a good question, and actually our 2 conducting officers we do have in Luxembourg, they appreciate direct contact with CSSF. And actually, I understand also on the other side, the CSSF likes talking to us directly, so they get insight, it increases transparency, and I think this is what works very well for us. In the past, we used to rely a little bit more on, for example, law firms communicating on our behalf, but we felt actually we can do, given that we have people on the ground, they can do it as well. Obviously, depending on the subject, we engage tax advisors, legal advisors who help us preparing the communication if it's a more formal one, but eventually we would then kind of send the letter, quote unquote, to the CSFF. And that, again, works quite well for us. Requires a team on the ground, but for us, in our case, it feels like the right decision.
Very good. Thank you, Michael. Christian, now moving to the venture capital people on the panel. B2B, you are sub-threshold IFM. Can you maybe explain to us what is your setup in Luxembourg, and also what does it mean, yes, precisely to have a registered IFM? We don't hear you, Christian. You need to unmute.
Right.
Thanks.
Sorry. Yes, like you said in the beginning, we have several funds in Luxembourg. All of them are CCARs in the legal form of an SCS. So that means they are fully tax transparent, which is more or less a function of our LPs. One of the reasons why we have several funds is that we have dedicated fund teams for these funds, and we want to have maybe 2 flagship funds where we have really kind of Chinese walls between the teams, and the teams are also legally separated. The ownership of the structures is separated, which again is a big advantage. If you want to have that, you can have that with a small structure as a registered AFM. Like my colleague said already, for a fully regulated big AFM solution, you must have substance, you must have assets under management because it's quite costly. I would even say 500 million is already really the low end. To be safe, it should be maybe more like 800. But on the other hand, it's also, if you want, the kind of risk, because if we are growing fast, we need to come up again with a solution to cover this. And for the moment, we have a concept to become our own AFM, but of course that will be a process. But the concept is ready. And so far, we can still live with a small solution, which is, again, in my opinion, one of the advantages of Luxembourg. You can have several setups and structures, and it's still fine.
Thank you. And can you maybe also explain to us a bit, like, why have you initially chosen Luxembourg as a domicile for your funds? I mean, you mentioned some of the points like flexibility, etc. But maybe can you, why did you come to Luxembourg?
I mean, B2B is, I think, the first fund is incorporated in 2010, so it was before my time. But definitely the VAT exemption on management fee, advisory fee is always a topic, especially if you compare it to Germany. And the other big advantage is to have really tailor-made solutions for either different fund strategies or for different LPs. So I think I would say these are the 2 biggest points for Luxembourg. And of course, you have all the lawyers in one city that you need to structure this.
Okay. And we have a specific question for you, Christian. I don't know if you've seen that already. So the one question from the audience is if there are any disadvantages to any of your portfolio company exits, M&A or IPO, by having your fund in Luxembourg versus other jurisdictions, being this for your own VC fund or your LPs or your entrepreneurs?
Yes, I saw the question. I think from my point of view, there's absolutely no disadvantage, probably on the contrary, because things like KYC, AML is more or less automatically safe in Luxembourg. Maybe also because we have these SCS structures in place, we have no no topics from the tax regulatory side of point of view. No, I would say that there's no disadvantage.
Okay, very good. So we had like an overview on the Luxembourg operations and the respective setups that each of you has chosen. We would like now, for the sake of topicality, do very brief, excursions, so as to say. Daniel, like just 3 weeks ago, the Sustainable Finance Disclosure Regulation. So now we're jumping into like ESG related topics. So the SFDR has come into force in the European Union. So now I would be interested to get your perspective from Switzerland on this European Union regulation and on how Luxembourg has been dealing with that new regulation from your perspective.
Yeah, happy to do that. We are regarding the SFDR disclosure and the regulation which came up. We think Luxembourg really did a very good job. Why is that? Because mainly in our private debt funds, we do have traditionally a high percentage of Nordic investors, and Nordic investors are very advanced in terms of ESG, and they focus today a lot that fund managers do comply and have ESG integrated into their portfolio management. And thus what the CSSF has done, and I would say offered a possibility to classify your fund as, not to become too technical, Article 7, Article 8, or Article 9, or you could say as a gray, light green, or dark green fund. This helps us a lot in promoting our funds to our investor base. So what we did actually on 10th of March, the whole thing became live. We qualified all our European funds within SFDR as light green or dark green. And there was a fast track procedure in place by the CSSF, which worked extremely well. Also, I think the third-party service providers, the law firms, the AFIMs, they all were aware of that. And it was a very seamless and relatively easy process. Of course, the problematic element was you had to have everything in place in-house to really implement ESG. That's a completely different topic. That requires much more work. But what the regulator offered, that was fast and easy. And for us, it helps us a lot in promoting our funds.
Thank you. And now indeed, like promoting your funds, that's always very important. So we're taking we're moving more to the angle and the perspective of the LPs, like having a fund in Luxembourg under the AFMD provides you with the passport to distribute your funds freely across EU markets to LPs in the European Union. But of course, Switzerland is a very important market per se for fundraising, and particularly for you. You have strong networks in Switzerland. So now the question is, you have Luxembourg fund structures, and how can you distribute these EU Luxembourg fund to Swiss LPs? Michael, can you explain to us what steps need to be taken by a Luxembourg fund manager to target Swiss investors, and how easy or burdensome that is?
Yes, happy to do so. I think it's probably less complicated and less burdensome than it may appear on first sight.
Okay, now it seems that the
things.
Okay.
Sorry, the line.
No, the internet connection was blocked for a minute, but it's good now. Please continue.
Good. So when it comes to the fund side, you need to essentially do two things. You need to, and depending on who you target, but if you want to target all types of investors, from retail, professional, institutional clients, then basically you need to appoint a representative for the fund, as well as a paying agent, and you need to prepare an addendum or a Swiss page for your prospectus. This is essentially a two-pager which sets out kind of the roles of the representative and the paying agent, but that's relatively straightforward. Then when it comes to let's say, the activity side. Whoever then acts as client advisor or makes the offer to different investors, and depending on who you target, you need to do a client segmentation. And if you, for argument's sake, not regulated in your home jurisdiction, you may need to register with FINMA. But for most entities, that's relatively straightforward and is not really a huge burden. And actually then also the role of the paying agent, the representative, from a, let's say, slightly untechnical and really from a practitioner's point of view, you hardly feel the impact. So they might be there on paper, but from an operational point of view, it's neglectable. Might be the non-technical view, but I think it's an important view from a practitioner.
Yeah, no, I think that's important. So so in that regard, it might be neglectable. And from a cost perspective, then what would be the average cost of appointing a paying agent in Switzerland?
I echo what was just said. It's really the whole exercise. It's a no-brainer. It's neglectable in the resources you have to allocate, but also cost-wise, really, it's a very, very small figure. It's also neglectable. Yeah.
Okay. So the question of the webinar was Luxembourg for Swiss fund managers, yes or no, question mark. So to summarize, I may invite you, what maybe Christian, you can kick off now. What would you consider your key messages you want to convey, whether Luxembourg remains the right jurisdiction for Swiss fund managers?
In my opinion, yes. I think maybe the difference or the distance might become smaller in the future, but for the moment, I think what we said about CSSF, the regulatory side, the speed of time to market, the translation of European directives into local law is still really fast in Luxembourg. That gives you, again, a kind of security in your product. I think that's still an advantage that Luxembourg has. And on the other side, I would say, except of the cost of the flights, there is not really any kind of disadvantage for Luxembourg GPs, for Switzerland GPs, sorry.
Daniel, yes or no?
I'm a full yes here. Yes, of course. But I have to say there is not much choice in the end left, because I think today you cannot really offer to your investor, if it's an institutional investor base, they are shying away from the offshore jurisdictions. So there is a clear trend to onshore. And if you're onshore, there's not much left where you can go. So Luxembourg is one of those jurisdictions, and I again echo what was said before. The level of third-party service providers, the way the CSSF is cooperating with us, makes it at the moment absolutely the place to be. If it's a fund, if it's not a fund, we are at the moment looking into securitizations again, so into CLOs. There, unfortunately, we cannot do it in Luxembourg anymore.
Okay. And Michael, what is your view or answer to the question?
For us as an impact investor, I think Luxembourg is and remains the domicile of choice. It offers us the flexibility in terms of different fund structures, different legal structures, and all that within an onshore domicile, which is something very important to a good number of our investors. And I can only repeat what was said before. So offshore jurisdictions for majority investors, particularly here in Europe, are really no longer an option. So Luxembourg remains the domicile of choice for us.
Thank you very much to all of you. I think I do not have much to add. I think you gave a very good summary and then your own view on Luxembourg. And I think indeed we see that Luxembourg offers a lot of flexibility, a strong track record, lots of expertise, concentrated expertise. And clearly in the last years now is also clearly embedded in the trend now to onshoring. So thank you very much. I think we have now room still, yes, a few minutes for Q&A, and I see already one question. So maybe I would just read that out and I would leave it to anyone to reply. So the question is, what is your solution to distribute a Luxembourg fund to EU investors from a Swiss-based PM's perspective? Does anyone want to reply to that question? No? Okay, so then we take it, maybe we take it separate. So let's have us at the second question. So by the sound of it, some of the panel would go offshore if the investors accepted it. What is it about the offshore jurisdictions that would offer an improvement on your Luxembourg setups? Okay, that's an interesting question. Anything in offshore jurisdictions, features that would even further improve Luxembourg structures, onshore structures? I don't know. Yeah,
I can have a first go, and then obviously my
yes, please.
Co-panelists should add. I feel today there's not really much of an advantage going offshore. Maybe a few years back when you didn't have the various limited partnership solutions in Luxembourg, when you only really had the fully regulated solutions, not the RIFs, then perhaps the offshore domiciles were offering things you couldn't do in Luxembourg. But nowadays, I feel particularly with the tax transparent limited partnership, which you can even have the choice between partnerships with legal personality, without legal personality. All those things you would potentially find in an offshore jurisdiction are there in Luxembourg. Hence, I don't necessarily see that is that you lose out when you stay in Luxembourg, plus all the additional benefits which we just discussed before.
Mm-hmm.
It's boring if everybody always agrees, but I agree again. I think at the first look, some offshore structures might look a bit cheaper in terms of cost or what third-party service providers charge. But end of the day, today, if you are able to bundle activities in Luxembourg, I would say even the cost advantage has gone. And so today there's not really a reason to go offshore.
Christian, anything to add, or you agree?
Yeah,
I
would again fully agree. I would even say what was attractive some years ago is nowadays, in my opinion, more risky, because if you transfer a huge amount of monies to offshore jurisdictions, the money might be blocked for any reason, just because a bank doesn't know who is that. I'm obliged to block this transfer. That happens from time to time. Not saying that offshore is kind of devil or something like that, but it's there's less control if you look at the big picture, in my opinion.
Okay. So I'm just checking. I think no more questions from the audience for the moment. No, thank you very much to all of you. I think that was very entertaining and insightful discussion. Thanks for your insights. And I may hand back to Stefan. Yes, that is correct, Stefan. Thank you.
Dear Carmen, dear panelists, thanks a lot then for your insights, for sharing with lots of details, your setups in Luxembourg, and certainly also for all those very positive feedbacks and compliments. So this does absolutely not hinder us to still work and do our homework for the future, to plan the next steps, to make Luxembourg again very attractive in the future, and then also to see what the competition is doing somewhere else. Dear audience, also thanks to you for joining us today. Maurice and I, the SECA and LPA, would like to thank you for your presence. The show and the webinar were recorded, and now I just give you a quick highlight of what is planned on the LPA program. So tomorrow we'll have a quick webinar on infrastructure, and then in April we will certainly do our favorite HR webinar series with BlackRock. We will have our private equity venture capital Luxembourg stories with Alpha Private Equity, and also finish the month with Invest Europe and also our Luxembourg ambassadors at the Invest Europe level, Gilles Duzemont and Patrick Michaud, in order to discuss the public affairs. So stay tuned and thanks a lot for joining. See you soon.